Welcome to the Do Zone, where entrepreneurs go to get things done. I'm your host, Josh Thomas. You can find me on all social media at JT Literally. Each week, I bring on experts from a variety of backgrounds to share their secrets on how to optimize performance so you can take massive action and crush your goals. Speaking of optimizing performance, did you know the average response time for online inquiries is 47 hours? Brutal. Our AI powered assistants respond within 5 to 7 seconds. If speed to lead is important to you, and it should be because most customers move on if you don't get back with them in 5 minutes, you should get your AI powered assistant today. It takes less than 5 minutes to set up and requires no tech skills whatsoever. To learn more, you can go to anabots.ai. Once again, that's anabots.ai. Today's guest is John Hannum. John is an experienced CFO with tenure in companies with explosive growth. As founder and CEO of PPS Solutions, he now uses his powers for good by providing large company financial support and experienced fractional CFOs to small and growing companies that need it the most. John, welcome to the Do Zone. Tell us something you believe is the key to getting stuff done that most people wouldn't think of.
Well, most people would think of it, but the key to getting stuff done is having cash in the bank. And today we're going to talk about how to keep cash in the bank and make sure it stays there throughout your business.
You know, the one thing that I've learned, John, over the years and working with thousands of different entrepreneurs is the thing that we take for granted, somebody else has no idea about. And that has tripped me up so many times. Like, well, most people would know that cash in the bank's important. Actually, that's not necessarily true. Just because we know it doesn't mean they know it. And that's why we have to talk about it. And so tell me a little bit more about like, how do businesses survive without cash in the bank? First of all, let's start there.
Well, obviously, liquidity and the availability to have cash would be key without cash in the bank. So, planning for liquidity events and thinking about the proper financing for the business would be key. And that's every section of the growth of the business, right? From startup, you have to make sure you're properly capitalized and have access to capital, and throughout your business cycle, you're going to have to figure out how much cash you're going to need, and then have access to that cash.
That's one of the hardest things for a lot of us is getting access to the cash. Like we all know we need it. Sometimes we don't really know where to look. And so it sounds like that's something that we need to dive into here. Let's set the stage. I am an entrepreneur. I'm running my business. I'm hustling. I got some money coming in the door, but it's just kind of cycling through. I'm running in place. I'm not able to grow because I don't have enough runway. I don't have enough cash to get me there. And so what are some steps that I might take and some places I might look to go and find more cash so that I can go a little bit faster?
Sure. Let's start with the idea that you said that you're watching your cash come in and out of the account, right? So what you're telling me is you have visibility only at the time that the transaction's happening, right? What we didn't talk about there is planning, budgeting, the idea of having visibility to what's going to happen in that account tomorrow or the next day. So the absolute key that you have to manage is having some type of forecast. And a forecast is super easy to make. You could literally think about what those things are and write them down. Here are my pluses, here are my minuses, and here's what my cash balance will be tomorrow, the next day, the next day. Obviously, as you get further out and thinking about what cash is coming in, you're going to get less and less predictable. It's like the hurricane models for the National Hurricane Center. They can tell where it's going today, but not tomorrow or the next day. Mm-hmm. What you really have to kind of figure out, though, is how that relates to what you expected to happen. So the first step in really thinking about cash flow in general is to have a budget, a plan, a cash flow forecast. Those can be related or they can be separate. If you hate the word budget and you don't want to make a budget, I think a cash flow forecast is super crucial to figuring yourself out. But if you make a budget, it should tell you exactly what your cash is going to look like at the end anyway. So forecasting is really the number one way to keep money in the bank. We as a fractional CFO firm do that as part of our service. We work with entrepreneurs to make sure that forecast says they're going to be positive, right? So we look out, it could be 13 weeks in the future, it could be 10 years in the future, and we make all kinds of assumptions about what's going to happen in the business. And then the first thing we look at is what does that do to the cash balance? If we're going to invest or do something within the short term or long term that takes that balance negative or even below what I would call a minimum reserve cash, then we have to look for options. And that's where your question was where do we find money? And that's there are a few
That's a
places to find
that's a
money.
whole different conversation, it sounds like. So, but one of the things that that really stood out to me in our pre-session here was you were talking about here's how you can make sure that you never run out of cash. And I know that that's attractive to a lot of people that might be listening is, well, hey, I run out of cash all the time and I'm having to do so much girl math that I got to make things work. And so, what are some strategies that we can put in place now so that when cash reserves get a little bit lower, we can replenish them with whatever strategy? Obviously, it's much easier to find money when you don't need it than when you do need it. So, if we're in a position where we don't need it right now, where can we go and look to keep ourselves safe?
Well, that's the key, right? So you want to have as much visibility and runway to what you're going to do as possible. So if you plan to make some investments, if you plan to think about needing more cash in the future than just your regular cycle, you need to apply for that loan or you need to get that capital, that investment, whatever it is, you need to get it first. When you need it is the absolute worst time because somebody's going to look at your financials and say, you need it too bad. I'm not going to give it to you. Best time to get a credit card is when you have absolutely nothing on your Amex, right?
That's right.
It's super easy. You can get 25 of them.
That's the most amazing thing because I was sitting at some mastermind event and there was this like credit expert on the stage. And he said, and I'd been in business for a long time when I heard this, and he said, go get yourself a business line of credit. And I'm like, I never thought of that before. And he said, it's not hard. Just walk into the bank and ask for it. And I'm like, okay. And so I just followed his instructions. I didn't need it. I was 100% debt free. I had a ton of cash in the bank. And I go in and I say, well, how much can I get? And then he's like, well, we really can't tell you that, but based on based on your business income, we think it'll be about X. And so I asked for X and I got it. And it turns out, and I didn't touch it for years. And then all of a sudden, something went sideways and I needed a lot of cash real fast. And because I had that line of credit, I just went yoink and everything was fine. Like, no, I mean, I had to pay it back, but the fact that that money was there, it was only there because I went and got it when I didn't need it. And it
That
saved my entire business whenever I did need it.
and it probably would not have been there if you had needed it at the time. So I do think planning
Right.
is the absolute key. Um, secondarily, when you think about the about paying it back too. So let's go through that forecast, right? You're going to need money next year. You kind of get that in line. Make sure you have liquidity to cover all of your business expenses for that year. Kind of do some analysis as well on if on scenario modeling, right? If all of your clients don't pay you, or if you have a decline in the day sales outstanding to where you're not getting the money in at the same rate that you used to, what does that mean, right? You want to have a buffer of cash to make sure that you're planning. But okay, you have to borrow the money, and next year you have to borrow the money, and it's there for you, and it's waiting. Um, you know, does your future runway after that still have the ability to pay that back? If you start taking loans and you're going to keep your cash balance positive by just continually taking loans, that's worse than folding your business at the beginning of that process.
Yeah.
Because you'll have debt and no cash coming in. So really the key to keeping cash in the bank is having cash come in. When you look at a temporary crunch or a temporary difference, you should look further into the forecast and make sure that you're able to recover from that given the income and expense needs of your company. There's a bunch of different ways to manage that cash too. And I think one of the things that we help people do often, like every day, is to manage that cash, collecting on receivables that are not being paid on time. If you have a client that's habitually 10 days late, which the CFO on their side is telling them stretch those payables, we're maximizing cash. So the squeaky wheel gets the oil in that case. You're going to if you start calling them when the accounts are due, they're going to pay a little bit faster. So you tighten your cash conversion there, and you don't pay your payables until they're due. That's There's magic there. I have some clients that really don't like to pay payables on the day they're due. They like to pay them when they get them. My grandmother was like that. The water bill, as soon as it came in, had to go in the mail. It's just not good cash management. It's conservative and safe, but you want to make sure that you've got that cash there in case something else comes up. Then you can pay the water bill on the day that it's actually due. So just kind of everyday blocking and tackling is great cash management, and it helps a lot. That's where your working capital goes.
I found that 90% of the problems that people run into can be solved with proper fundamentals like blocking and tackling. If your business is not performing the way that it needs to, you should probably increase your sales. If you're not selling as much as you want to, you should probably take a look at who you're talking to or what the message is. There's no voodoo behind this, and finances is one of those things that most of us wear like a badge of honor. Like, I suck at math. As an entire nation, it's like, oh, that's cool. And it's like, welcome to the brotherhood, man. But what we need to do is we need to understand just the basics, the fundamental blocking and tackling of cash flow. And if we've got that in place, we protect that cash so we can use it if we need it and then distribute it accordingly. And so tell me a little bit about what is a fractional CFO and who is the best fit for a fractional CFO?
So a fractional CFO is a CFO that is cut into small slices and delivered on demand on a monthly basis. We don't actually cut the CFOs into
That
slices.
sounds that sounds gruesome, man.
it's a it's a process. My background is corporate CFO, so I was the CFO of a number of different companies and helped them grow, 2 to 4 to 15,000 times over. I love growth. I love putting systems together, and I liked doing that for one company at a time. I always figured I would go on to do it for the next company, and then ring the bell on the NASDAQ again, and rinse repeat. But in 2020, I kind of tripped into the idea of working with a small business, and it really opened my eyes to the fact that small business doesn't have the same resources because they can't afford that. CFOs are expensive. So I made it my mission to kind of chop up CFOs and give them in small pieces to small business. And it's really made an interesting business. It's made an interesting mission. So the first thing to answer your question really is, what does a CFO do? It's not your CPA. They don't do your taxes. I would be terrible at taxes. None of my clients have me do their taxes right now because I don't look good in orange, and they don't look good in orange either. So we have a competent professional that helps us to do the taxes and make sure that we're doing everything exactly right. Tax strategy, I can talk about all day long because I understand how things work and what tax shelters are, and where the concepts go. I can follow, but we don't do things that CPAs do first. We help you actually run your business, and that might look like helping you finance something. It might help look like budgeting, planning, cash flow forecasting that we're talking about. Maybe it is helping to secure that liquidity, those loans, or long-term capital, maybe equity if you're doing a startup. It might help in mitigating risk, like looking at your insurance policies, making sure with your agent that you're actually covered for certain things. Treasury, making sure you have the right banking relationships, literally anything financial. The CFO sits at the executive table with the owner or entrepreneur and helps them make good financial decisions. You have to come into that space a little bit and understand what a balance sheet and an income statement are. But the CFO provides all of that insight and can help you navigate those questions. The
Okay.
worst part would be if an entrepreneur would kind of be saying that they do understand what they don't understand. Your CFO should explain those things to you and should help you through the finances and make sure that you really do understand and are making great decisions.
Awesome. And so where can we go to learn more about this and get connected with you?
Sure. Our website is ppsfinance.com. It's PPS is for people, process, systems, because I believe those three things in that order can really accomplish great things. When I named my company on a Tuesday morning just to to start it, those were the three letters I thought of. So I love it. ppsfinance.com. There's an easy way to book some time with us. personally, I really love working with small business, and even if we don't execute a CFO service or hook you up with a different resource, I love answering questions. So if somebody has a question on finance, I will answer questions all day long. I don't take any personal CFO clients any longer, so all I do is educate and help people.
Excellent. Love that. So ppsfinance.com, yeah?
Correct.
Cool. Hey, we're going to wrap up from here. Thanks so much to our guest, John Hannum, for joining us and sharing some wisdom about how he gets stuff done. You can connect with him directly by going to ppsfinance.com. People, processes, and systems. That's a great Tuesday morning name. Just saying. So whether
Thank you.
you're out on your morning commute in the gym or somewhere out in the field, snap a selfie, tag me at JT Literally. Show me what you do in the do zone. One more time, if you're looking to boost sales, cut costs, and free up your time for higher value tasks, Anabots will build a custom AI assistant for your business so you can get more done in less time. You can learn more at anabots.ai. Hey, that's it. Let's get to work. Hey, thanks for listening to the Do Zone podcast. If you're running a service-based business that's looking to grow this year, let's talk about how we can slingshot you into momentum with a quick injection of cash and sales. Our clients typically see results in as little as 7 days. To learn more about what we do, you could go to factor1.io. Once again, that's factor1.io. We'll see you next time.